Exercise 2.5, our final exercise to do with the credit sales and debtors for now. So the following information relates to parking merchants. Instructions. Take the information into account and, first, open the given ledger accounts on the 1st of January with the given balances and totals. Next, post the column totals from the given subsidiary journals to the opened accounts and close off the accounts properly. So first of all, they give you the information or the figures appearing on the 1st of January. So let's take those opening balances to the ledger accounts. First thing we need to do though is we always name our accounts first. So you will label them, in other words, telling me trading stock is an asset. Debtors control is also an asset, increasing on debit, decreasing on credit. Sales is an owner's equity account, increasing on credit. Cost of sales is an owner's equity but an expense account, so increasing on debit. Debtors allowance is also an owner's equity account, also an expense, so decreasing on debit. Therefore, after this is done, then we can put in our balances. All on the plus side except for expenses goes to the negative side. So January 1st balance brought down 678,000 in trading inventory. January 1st balance brought down 90,000 for debtors control. Sales total brought down 533,100. On the debit side of cost of sales, total brought down 356,000. And then in debtors allowances, total brought down of 16,900. Now before we post, we first need to just figure out our question marks. Now our question mark the whole time is to do with cost of sales or sales, therefore it has to do something with the markup. But the markup percentage weren't given to us. We can, however, go back to our totals and work out the markup from there because sales, cost of sales and debtors allowances were given to us. So in other words, to work out markup, you take your gross profit over cost of sales. Now how do I get gross profit? I take sales minus debtors allowance, in other words to get net sales, minus cost of sales, and that's going to give you gross profit. So in other words, sales minus debtors allowances minus cost of sales over cost of sales gives me a total of 45% on cost markup. So I use my cost of sales and my selling price formulas to work that out. First of all, to get cost price, I take cost price is equal to 100 over 100 plus markup times the selling price of 101,210. That gives me a total cost of sales of 69,800. Then in the debtors journal, to find the sales amount, I take the 140, which is 100 plus 100 plus the markup, over 100 times the cost of sales or the cost price over 1, and that gives me 140,360 in total. Now let's talk about the posting. Now the first thing that I will post is the cash receipts journal. I have bank, debtors control and sales. Now bank, if I can decide what happens to bank, then I know that debtors control and sales will be the opposite. So in other words, bank, which is known as an asset account, needs to increase, and it increases on the debit side. So therefore my bank account will be debited, and therefore debtors control and sales will be the credit entries. Then cost of sales goes together with trading stock, and cost of sales is always debited, creating the expense, whereas trading stock is decreasing, so it's a credit. So when I take this to my information, firstly I will say what's happening to bank, but then bank isn't asked. So I ignore bank and I go straight over to the next one, which is debtors control. So if bank would have been the debit entry, Then in debtors control, I would have the credit entry telling me that bank would have been the debit of 134,000 Rand. Then in sales, same thing applies. I say that bank would have been the debit entry if I were asked the bank account. CRJ is my journal used for 101,210. So in other words, these two amounts, the amount in sales and the amount in debtors control, they add together to give me the debit which would have been put into the bank account. Then in terms of the cost of sales column, cost of sales takes away or decreases my trading stock through the CRJ 69,800. So I'm taking it out of trading stock and moving it into my expense account. So in my expense account, I would say the expense is debited with 69,800 Rand. Next, we need to post the cash payments journal. So again, if I can decide what happens to bank, then the rest of them would be the opposite. So if bank is an asset account and I know that I want to decrease my asset, I need to put through a credit entry in bank. So bank will be the credit, therefore trading inventory and anything else that was left out would have been a debit entry. So if bank were asked, I would have taken that to the credit side of bank. Now it isn't asked, but trading stock were, so I take the entry to the debit side saying that bank would have been the credit, CPJ 198,000 Rand. Now for the next one, the DJ. So the DJ has only two columns, sales and cost of sales. Now I hope you know by now that sales goes with debtors control. So sales needs to increase, in other words it needs to credit, so that debtors control needs to increase, and that happens on the debit side. Cost of sales then goes together with trading stock or trading inventory. So cost of sales increases on the debit side, whereas trading stock decreases on the credit side. So let's go and take that to our accounts. Firstly, we are increasing our debtors control account through sales 140,360. So this debit tells me that it's supposed to go to sales on the credit side. So I take it to sales on the credit side. I'm going to say debtors control, DJ, 140,360. So therefore, the first entry in sales was coming from the CRJ, whereas now the second entry is coming from the DJ, meaning that the first entry is all of my cash sales, whereas the second entry is all of my credit sales. Now for the recording of the cost of sales, I take the amount out of my trading stock account. So in other words, a credit in trading stock of 96,800, and I bring it into account in my expense account 96,800. So the same thing apply. The first entry was from the CRJ. So in other words, the first entry were all the costs of sales connected to my cash sales. And the second entry, because it comes from the DJ, I can clearly see that this is now connected to my cost of sales, but of my credit sales. The final journal we then need to post is our debtors allowances journal. And I hope that you know by now that the debtors allowances journal has two columns. The debtors allowances column works together with debtors control. So where sales were credited, debtors allowance would now be debited. And where debtors control were debited before, it now gets credited. The exact opposite also happens to cost of sales and trading stock. So where cost of sales debited, it would now credit, and where trading stock credited, it would now debit. So let's go and fill that into our accounts. Firstly, debtors control is the debit entry that says it's going to go to debtors allowances is the debit entry, and it's going to go to debtors control 18,125. So let's make that yellow to remind ourselves it's the DAJ. So in debtors control, we're going to see that the debtors control account decreases due to this entry of 18,125 Rand. It decreases because I can't expect my debtors to pay for something that they've returned back to the shop. Then in terms of the trading inventory, I used to take out the trading stock. Now some of the stock that I've taken out was returned back to me, so I'm adding it back into the account. Cost of sales 12,500. So therefore this cost of sales is then taken out of cost of sales. So in other words, I credit my cost of sales account with the trading stock of 12,500 Rand. And then I'm done. So the only thing left for me to do is to balance out my accounts. So the first balancing is my trading stock. I balance and I see the balance carried down, brought down to the new month is 721,900. Debtors control, I balance out and I see my balance carried down 78,235. Sales, I can simply add up 774,670. Cost of sales, I can balance out as well, or total, and it gives me 510,100, and debtors allowances 35,025. Done. I hope that you are feeling confident with all the credit transactions involving debtors.